Today, folks, is all about the stocks I'm buying for the month of September. We're going to talk about a new strategy. I have a 4-month plan that I'm going to be implementing. We're going to look at the ETFs, the individual stocks, and I have a small cap company that's a bit of a turnaround story I find very intriguing. If that is a conversation you'd appreciate, hit that like button because I'm more bullish on this market than ever. I think 2024 is going to be one of the biggest turnaround stories I think anyone could have ever anticipated. I'm going to explain to you why, because I made a video saying don't be dumb 10 days ago. Buy the dip. I don't think you understand my plans, my implementation. Bulls will always win in the long run, and bears will eventually get sent to slaughter. Yet so many of you, I don't think, understand the psychology of my long-term investing strategy, saying terrible advice, better to be late to a rally than early to a downtrend. Some of you saying text, it's going to drop more. Come on now, Kyle, it's going to drop more. But some of you actually have the common sense to be like, it's not even a correction territory yet. But yeah, always dollar cost averaging, ignore the noise. Always ignore the noise, because I feel like right now it is very reminiscent to almost when I started investing. When I started investing, I had almost like half my investments at the time in precious metals. I started this YouTube channel 4 years ago by liquidating most of my precious metals. Now I still have a diverse portfolio of crypto and precious metals, but they're very mitigated because I realized there was more opportunity in the market. And I saw that opportunity in companies like Apple, Tesla made crazy outsized returns during a period where I was being fed this confirmation bias. When you chase opinions, you kind of get it in your head that things are really bad and you only listen to opinions that fulfill that prophecy, like Peter Schiff. Those were the people that manipulated me early on and gave up some extra returns by wasting a lot of my money by over leveraging in precious metals. Though again, I still believe those can be a proponent of a portfolio. Yet here we sit today after making that video 10 days ago. The S&P is up 2.5%. I mean, the NASDAQ's up 4.5 points. A lot of these individual tech stocks have been flying again, not meaning that this isn't just a hiccup, a bit of a bounce into a further correction. I don't know, but I don't care because I'm always buying, and I'm buying more aggressively when the market goes down. Why do I think the bull market is here? Why do I think we're going to see an explosion in 2024? Because this, to me, looks like a soft landing. The data that I look at does not scream housing's collapsing, the stock market's going to implode. I mean, take a look at Apple's revenues here, for example. We've seen 3 consecutive quarters of negative revenue, but this is very reminiscent to 2016. In fact, 2016 was a worse time period for Apple than it is today. I mean, you look at Microsoft, yeah, things have slowed down. Higher interest rates bring the market down like gravity in consumer spending, but consumers still remain strong. Microsoft is still growing. Does this look like a recession? Does this look like a 2008 kind of environment? Is that what we're seeing here? Is the bubble still waiting to be pricked? I figured it had been pricked by now with how much we've seen interest already go up. I mean, you take a look at these companies, man. Amazon is trucking along. It had over 10% growth in revenue. For a company generating $500 billion in revenue, that's $50 billion extra dollars in revenue. That really proves the e-commerce, realm of things hasn't come into full fruition yet. There's still room for e-commerce to expand and destroy the retail, brick and mortar kind of businesses. I mean, these technological jumps, this revolution hasn't fully taken place yet. Look at companies like Alphabet, still growing. Even on the Canadian side of the border, I'm looking at things like Shopify that's growing at 30% revenue. You got TELUS here, the more boring telecom giants. Yeah, they're getting eaten up by obviously higher interest payments, but these companies have levers to control this kind of environment. They have so much income, they have so much money. They say, hey, we got to pay a little extra money here. We'll cut jobs. We'll trim the extra fat. We'll refine the business down like Shopify did, getting rid of obviously a lot of the investments they put into warehousing to compete with Amazon. And look at what that's doing to these companies. It's refining and dining them. It's going to trim the fat to make them even more resilient when interest rates start to come down, which I believe is going to happen next year, and when the market starts to stabilize a bit. And again, this will truly be potentially the very first soft landing we've ever experienced. I think we're going into a technological jump here, guys. I think what we're about to see is only going to happen once in your generation, where we see cars transition to EVs. Everything from even brick and mortar like McDonald's is going to transition into robotics to increase their margins. We're going to see margin expansion happen in front of our eyes. Hell, even the banks, like I said, the banks I'm so damn bullish on. They're so cheaply valued, especially with things like TD hitting record total revenue, yet getting eaten up by loan loss provisions. That's going to come to an end eventually, right? As mentioned, housing year over year still seems to be up. We're in a slower period for housing, so month over month, quarterly, it is down a bit, but year over year, it's still up, especially in the most expensive growth real estate markets like Canada here. You take a look at money market funds, there's more cash on the sidelines than there has ever been. We hit record cash in money market funds at the same time the S&P almost hit an all-time high. You know what that says to me? That says to me that there's a lot of cash in the market. People aren't going broke. There's money out there. Investors right now are not putting money into real estate because they can't get the same rate of return they did. They can't leverage and get decent cash flow. So they're putting that money into cash. They're putting it into paper assets like bonds, GICs, and of course, the stock market. So when people tell me the stock market's overvalued, I'm sorry, I got to call somewhat BS here because obviously it's not trading at the levels it was in 2008. It's not trading at the levels it was during the dot-com bubble. And obviously as margin expansion happens because of robotics, because of AI, and obviously as revenues explode because of technological innovations like self-driving and, genomics and healthcare get better, I can't foresee that, there deserves to be a premium on the market. And that premium can last. I hate when people say, oh, it's overvalued, it's overvalued. Well, are we in a growth market still? Is that what you believe? Things have slowed down, but this could just be a hiccup in a long-term bull run that hasn't passed us just yet. So taking a look at my portfolio, my strategy, what do I think is going to happen here moving forward? Obviously, I'm bullish as all hell. I'm starting to buy back into the market here. I was picking up some more bank stocks, but what I'm really looking to do is re-strategize after purchasing a piece of real estate. We had to put a huge deposit to make the numbers make sense, but now what I'm doing is I'm starting to get that extra cash and I'm looking at divvying it up into my tax-free savings account, which was completely liquidated, by the way. I've got like nothing left in my TFSA. This is one of the most resilient accounts any Canadian can own, and it hurts me inside. I can't refund this till next year. So what am I doing in the meantime? Well, I'm going to be taking a lot of my money and dumping it into VFV so I don't have to deal with conversion fees in my managed regular brokerage account. That's what I'm going to use as a Parker place for now, just so I don't miss out on the market for the next 4 months, because obviously I'm not sure where it's going, but that'll give me that S&P 500 exposure. And I do want to point out, if you love the way I track my portfolio here and you want to chat with me and my chat group directly, I'm going to leave a link to my Patreon members below. You get finance tools, spreadsheets. You can join our chat group, talk with me 24/7, 7 days a week, and watch a ton of other 6 and 7 figure investors just crushing it right now. I also should point out that we have had some decent dividends in the last couple months. Year to date, we've got 6,100 in total dividends, even with the reduction in the portfolio, which is probably going to slow down a bit from the dividend standpoint. Again, my fiance also has her side of this portfolio, which I update in the Patreon member group. But outside of VFV, I do want growth out of this market. I still think tech is going to be the future of everything that's going to unfold in front of our eyes, and I'm glad that we get a lot of the exposure through the S&P, but I do want to continue to get outsized returns. And I realize that my fiance owns Apple, she owns Meta. We have large exposure to individual tech stocks already, some of the Canadian banks. So what I really want to do here is start divvying away from the individual stocks as much, not selling them obviously, and getting that new exposure to the QQQ ETF. So at the beginning of the year, I'm going to take some money. I'm not buying it yet, but at the beginning of the year, when I put some money in my TFSA, I'm going to divvy it into about 3 different piles. One pile's just for the Canadian markets, one pile for VOO or VFV, depending on what direction I go in there, but probably the US dollar converted version, which will be VOO, and then a little bit into this growth ETF QQQ. And that way I'm getting this most exposure to the US, which is where I want my money to be, and where you can see that I'm voting with my dollars anyways. I'm pretty much primarily just exposed to the US market. I'm on the Canadian side of the border. What I'm going to do here is in my TFSA only, long-term retirement, I just want it to be stable, cash flow, growth positive. So I'm really looking at these 3 ETFs, QQQ, VFV, and VCE. That gives me Canadian market exposure, US, and then tech growth exposure. That's all where my long-term retirement money is going to go. But in my corporation, in my corporate account, moving forward is where I want to focus on the individual stocks, and I have been making a list. I've already loaded up on the Canadian banks. I'm pretty much done with that. Any extra money I get, probably from YouTube AdSense, stuff like that, I'm going to be dumping it into things like TELUS. I think TELUS is trading at a very favorable value here. I really want to pick it up. I'm looking at utilities like Hydro One, Fortis, I think could be really good stabilizers, and obviously some growth vectors with Canadian National Railway. I want to start building out a dividend portfolio in my, in my corporation, so I can start paying that passive income out to myself. So that way the corporation's always generating decent income, where I'm currently hold over right now 6 figures in investments. Very lucky to have that still. But outside of that, guys, I'm also looking at small caps still. And I actually ran into an old friend that I worked with a couple years ago, a gentleman by the name of Rich Wheelis, who took over Parcel Pal Logistics, and he has been turning this around. And I remember meeting him saying that I'm fixing this up. I'm going to make this cash flow positive. I'm going to take this thing, where it deserves to be. And right now, this is a $4.6 million market cap company that focus on last mile delivery in the US and Canada. And just taking a look, because they recently just dropped earnings, and after talking to them, I'm just like, I have to check this out, right? And we're talking about a company right now that on the 6 month generated $5.8 million in revenue, but their market cap sits at $4.6 million. They have gross profit of $1.1 million. I mean, they're almost making, they're trading at like 50% of their gross profit right now, which just blows my mind. And the company posted a net loss, and he brought it down so much to only $110,000 versus $1.4 million this time last year. here. He's really turning this into a new story, and he wants to get it to cash flow, and he could pretty much be cash flow positive if they just didn't reduce as much amortization cost. I'm going to be breaking this down a little farther because I've been seeing a few YouTubers talk about this stock because it's just basically hit the basement bottom of its price. It's been able to do nothing for the last year. It's just been playing this trend, which honestly, considering it's literally a 0.1 cent stock, every like half point movement, we're talking about 100% gains here. So I'll be taking a small position here and add it to more of my speculative side of my portfolio because I just feel like this isn't a company that's going anywhere anytime soon, as much as people think it's going bankrupt. And you got to keep in mind, back in the day, Rich wasn't part of this company. This is like one of these stories that I think just has real potential, and I'm going to break it down a lot further in its own dedicated video, so consider subscribing for those updates. But at this point, I do want to pass the question off to you. I think 2024 is going to be one of the best turnaround stories that people just didn't anticipate because the news and the rhetoric is so negative when the bottom line numbers just don't scream negativity. I don't think this is a bubble that just needs one prick or one, like, you know, just one thing to break and the whole thing falls apart. I don't think we're sitting on a house card of dominoes here, and I don't think things are as overvalued as people think they are. I mean, if Nvidia had any proof to that, I mean, again, Nvidia is expensive, but their PE just dropped by like half. Just keep that in mind. They're justifying some of the value there. But I'll pass the question off to you. I'd love to know what you guys think about all of this in that comment section below.